Short covering helped the grain markets push to the upside. Corn futures ended the day above some short-term moving averages. Beans were helped by rallies in soybean meal and bean oil. Wheat was widely mixed, and livestock futures generally erased early losses to close higher. But the gains in all of those markets pale in comparison to the sharp gains in cotton futures.
Live from beneath a shower of sky kisses via Farm Journal broadcast, this is AgriTalk. This afternoon, it's a conversation with Joe Kooima from Kooima Varilek. Directly following the news, Oliver Sloup from Blue Line Futures. I'm a handsome newsman, Davis Michelson. Now, say hello to the host of AgriTalk, Chip Flory.
All right, Davis. Hey, thank you so much. Getting a little rain down your way, huh?
Some sky kisses, bro. It was thundering and lightning and everything during the morning show, and it's still going.
The city of love down there, I guess, huh?
Indeed. Got to refill those fountains for summer, baby.
Yeah, no doubt. You know, it's been a while since we've had an opportunity to do a radar summary at the start of the show.
Ooh, let's do it.
Yeah, it's definitely worth doing. We've got rains across eastern Kansas, into central Missouri, northwest Missouri, southern Missouri, down into northern Arkansas, and it tails all the way down through southeast Oklahoma into central Texas.
Oh, good.
And there is snow in western Nebraska,
Whoa.
Western South Dakota, and even a line of snow up in central Minnesota right now. So it's happening. I mean,
okay.
Rains are moving into southern Iowa as well. There are some heavier showers just starting to develop a little bit south and west of Des Moines. So it's happening, dude. We're supposed to get rain up in northeast Iowa starting tonight, like 10 o'clock, 9 o'clock, something like that.
Mm-hmm.
But most of tomorrow, it sounds like we're going to be seeing some much needed, much wanted, and very beneficial rains coming our way.
Absolutely.
Yeah, love it. Welcome to AgriTalk. Glad that you're with us. Joel Kooima, KKV Trading, is our guest analyst today. Looking forward to the conversation with Joe. We got Oliver coming up here in just a little bit. Let's go ahead and get to it.
Well, Chip, wheat futures were widely mixed today. Hard red winter wheat futures opened near session lows and shot to the upside on aggressive short covering. May HRW futures tested resistance at 580 before setting back to post a high-range close. May soft red winter wheat had to deal with news that China has canceled the purchase of 130,000 metric tons of U.S. SRW wheat. The May contract opened slightly higher and mid-range, then fell to a session low close and a new contract low. Export sales of wheat week ended Feb 29 totaled just 271,000 metric tons. That was at the low end of trade expectations. July HRW wheat futures today were 14 3/4 cents higher, 561. July SRW wheat down 2.5 to 540. July spring wheat closed at 657 1/2. That's up 9 3/4 cents, Chip.
Boy, if the short covering wouldn't have come into the HRW market, it would have gotten ugly in SRW today. Still, SRW is slightly lower, but certainly helped out by the gains in the HRW and the spring wheat.
Well, Chip, aggressive short covering drove corn futures solidly higher. The May contract opened near session lows and closed near session highs. Today's settlement was the highest for May corn since February 13. Export sales of corn week ended Feb 29 totaled 1.11 million metric tons, and that was in line with trade expectations. Japan topped the list of buyers. Traders continue to be cautious about the growing season for Brazil's safrinha corn crop, but the current forecast has little risk to yields. May corn futures 9 1/4 cents higher, 438. July corn up 9.5, 449 1/2. December corn futures closed at 469, up 8 cents today.
Boy, normally when I hear a market report that says, well, it was short covering that took prices to the upside, I kind of figure, well, we're coming up with reasons to fit the market action rather than market action to fit what's really going on. But with as short as the funds are, and they've covered a lot of shorts already, but with them still holding a big short position, I think that's probably what it was, money management.
Well, soybean export sales totaled nearly 614,000 metric tons, and that was slightly above the top end of trade expectations. Soybean meal sales were slower than the 4-week average, but soybean oil sales were nearly 3 times trade expectations and up sharply from the 4-week average. Brazil's soybean harvest is pushing ahead, and the market continues to absorb hedging from Brazil, but aggressive short covering sent prices solidly higher. May bean futures opened at just under the pivotal 1150 level and then accelerated to the upside with futures near session highs on the close. May beans were 18 cents higher today at 1166 and 1/4. July beans up 17 and 1/4 to 1176. Novi beans closed at 1153 and 3/4. That's up 11 and 1/2 cents, Chip.
Yeah, May meal today up $4 a ton, 334.40, and May soybean oil up 103 points to 46.35.
Export sales of cotton in the weekend at Feb 29 were slow at just 52,000 bales, but it did help to drive prices sharply higher. July cotton 379 points higher, 97.78. On the livestock's heavyweight choice graded boxed beef values were up $1.24 this morning on modest movement of 51 loads. April futures again rallied to test resistance at the bottom of the October 23 downside price gap. All told, April fat cattle were $1.47 and 1/2 higher today, 188.72 1/2. June futures up 132 1/2 to 184.60. April feeders up 42 and 1/2 cents to 256.30. And on the snout side, April lean hog futures were 47 and 1/2 cents lower today, 84.52 1/2. June hogs up 65, 101.15. Chip.
All right, thank you very much, Davis. Let's bring in Oliver Sloup, Blue Line Futures. How you doing, Oliver?
Man, I'm doing pretty good. It feels like the rallying range was like a limit up day. It's been a while.
It does.
It was far from it, but it felt good.
It certainly did. You know, and I think part of the reason for that is not everything was coming along for the ride. So when you see that 8-9 cent gain in corn and above some of those short-term moving averages, it looks more impressive than maybe it was.
It absolutely was. I think because we haven't seen a sustained move like this through the whole trading session in quite some time, it probably was, better than it may have looked. Getting out above the 20-day moving average, everybody's been harping on that all week. I think it became kind of a self-fulfilling prophecy where we get out above there and you entice buying and some short covering. It kind of propelled us to the next level. So for that May corn contract, we're just back to the breakdown point from February 14th, 440, give or take a penny or so. That's going to be a big level going into tomorrow's report in the weekend. If we get out above there, maybe that entices a little bit more short covering into next week's trade. Ultimately, with the way the funds are positioned, I think corn can probably get a little bit more juice out of the squeeze from here. But I think if we do get a more meaningful rally over the next month or so, I think producers are going to want to take advantage of that. Looking back at 2019, we had a nice kind of V-shaped recovery on the back of that massive fund position back then, but it was fairly short-lived as we dipped back lower.
Yeah. Real quick on the cattle side of thing, April cattle finding resistance at that gap, that downside price gap back in October.
Oh man, that 189, 190 has just been a brick wall. But the more times, I always compare it to a wrecking ball. The more times we hit against it, the weaker it becomes. I think we can break out above it.
Gotcha. Good stuff. Thank you, Oliver. Appreciate you, buddy.
Take care, Chip. Yeah.
You bet. Oliver Sloup, Blue Line Futures. Okay. None of the markets are out of bounds when it comes to this guy. Joe Kooima, KKV Trading, is up next here on AgriTalk.
We've cleared the schedule for you. Give us a call at 855-482-5524 and join the conversation.
You can also send us an email, things that you want to talk about. Love to hear it. That's host@agritalk.com. Welcome back to... Yeah? What?
Welcome back to AgriTalk. You're right. I got some sad news today. Apparently, the email address davis.hatemail or davis@hatemail.love.
Yeah.
Apparently, it doesn't exist.
Really?
So all of you good folks who have been emailing me, I'm sorry, the email doesn't exist. Sorry.
Yeah. Go ahead and send it to host@agritalk.com, and I'll make sure better. Davis gets it.
It's better. Yeah. That one works.
All right, welcome back. I'm Chip. Our today's guest analyst, Joe Kooima, Varilek Trading, joins us right now. Joe, it's good to talk with you again. How are you?
I'm doing very well, and thank you for having me on this afternoon. I really appreciate it.
You bet, man. I love having you guys on. We started dealing with Scott Varilek when I was looking for cattle guys, but you and Brad have been great additions to the show from time to time, so we certainly appreciate it. Talk to me about this bounce in corn, in beans, and we can even throw wheat into it, the hard red, but primarily corn and soybeans here, because it's tempting to look at the strength that we saw in the market and just say, whoa, man, that's it. Lows are in. We're off to the races. How high can we go? What's a more realistic view?
I think we should take this on a very, very third grade type of
Good.
I don't know, field study type thing, like one step at a time here. All right. So we got ourselves corn specifically above the 10-day moving average, which that in itself was a feat, right? So that happened last week, and we spent 6 days above it, actually. And we used the 10-day as a little bit of a springboard. And we saw that happen early this morning where it popped up through the 20-day. These are very simple moving averages that usually don't pencil in a whole lot, but my goodness, we've broke this market over 30% from its highs. So we have to take a very simplistic approach. And I think that's what's going on here. And the beans are kind of the same way. That's a little bit more nip and tuck over there on that chart until today, but it spent a lot of time hovering around the 10-day, and today we used it as support and cracked through the 20-day. So these are big gains that we saw today, but we got to take it one day at a time. These are little chip shots. We know the funds have a big net short position, but guess what? They respect the chart just as much as anybody else too. So I think that's where you're seeing some covering here going on. But yeah, it's nice to see this. For a while there, for 2 months there, it was not a fun market to really talk about or even comment about. But now we got a little blood flowing again. So that's always good. Phones are ringing.
That's good. That's good. The other thing that maybe makes today look better than what it really is, and you know what, I've said that a couple of times now, and I'm not trying to downplay it because today felt really good.
Absolutely.
But the fact that soybean meal and oil rallied along with soybeans, the whole complex was moving to the upside. Again, that added to the momentum and the feel good of an upside recovery, didn't it?
Absolutely. You get the flow of buy orders come in continuously, and it's nice to see all or most of the grains follow suit. Yesterday I thought it was a good, very good close for beans and corn, considering what the counterpart wheat was doing. They're suffering big time. So I think kind of the strength was led on a little bit yesterday, or at least some of the gusto of, hey, let's try to buy this thing, because it deflected all the selling activity that was happening with wheat yesterday, and we maintained a close above the 10-day moving average for corn. So that's where you saw your follow through today, and you're getting into in front of tomorrow's report, which it's just a monthly checkup. It's just a monthly health checkup. Like, all right, this is our stocks. This is what we have yet. So let's not overlook this. Tomorrow is what I'm telling guys, and that sense has to be in the back of our head too, that just because we rallied into the report does not necessarily mean that it is bullish. The funds were a little bit net sellers yesterday, but big net buyers today by the looks of it. They're not afraid to also flip back and sell some more too if they get the right data thrown in front of them, basically.
Yep. Yeah, they're willing to play on both sides of the market right now, which is going to create some volatility in the grain markets. Joe, so the recovery that we got today, what do you think it means? How should corn and soybean growers react to what has happened here the past couple of days?
I've been kind of in the camp where this is what I would present to somebody looking for maybe a little bit off the wall marketing type strategy. So what I would say in this scenario, I didn't write down any bean call options, but I'm going to produce corn this
Okay.
year. So what I might do is I might look at a 520 December corn call. All right.
Okay.
I might buy it because you have a lot of weather coming up in front of us. And yeah, you look at your drought maps and stuff. It's starting out dry. We got guys tickling the dirt around here. It's south of us. There's a lot here in front of us yet. I think the bottom to me is in place to a certain degree. But what a guy can do with something like this strategy is that the market does continue to rally and the funds continue to dive out of short positions.
Hmm.
I'm going to have the right to be long. I know I'm speaking opposite of what a producer should do, but in this case, if I'm buying the 520 call and the market does work higher,
Hmm.
I'm not afraid to maybe do some hedging into
Yeah.
it because I have something offsetting it on paper. So I kind of do like that idea, especially this time of year, that, hey, I'm long at 520, but there is a gap in December corn up there at 502 area that, hey, maybe I can start selling some futures or some cash against it if that futures market gets up to that 495 or $5, get some sales in with a strategy like this. That is something that I'm kind of voicing out there just a little bit. It's a limited risk time kind of a way. You're just out your 20 cents if that's the case. But I think some producers like that. They like to have a little more skin in the game in that direction with paper. So just
Yep.
an idea.
Yep. Yep. No, I like it. I like it. So let's take a little bit of a different view of it. And instead of coming at it from a row crop producer's point of view, let's go with a turkey finisher, hog finisher, cattle finisher. Do they need to be getting some feed coverage in place?
I think for the next, just say 6, 7, 8 weeks, it
Okay.
probably isn't all bad to get maybe some cash needs underneath you. It at least gets you through that aspect of this weather coming up and knowing that the funds are net short. And if there's a spark out there somewhere, they're going to cover. But don't let this cheaper input get away from us because we had 3 years of it. And nobody wants to go back to that. A guy can be real aggressive. A 450 July corn call is 24 cents. That captures something below 475 since you're paying 24, but that captures something below $5, just say. There's nothing wrong with that. A $5 corn isn't really going to hurt a guy, but 5.5 or $6 stuff, it definitely will,
Yeah.
especially with these high price stuff that we have.
Yep. Well, and then the other side of it here, Joe, is if you do have your corn locked in, if you do have your meal locked in, I didn't ask you about meal. I mean, but 330, what is it? 335, something
Yep.
like that. Yeah, I call it 335 on the meal. That's not a bad place to get some coverage, is it?
No, not at all. I mean, what, 6, 7, 8 months ago, it was $80 above
Yeah.
that, if not more. So, these are, like I said earlier, these are prices we haven't been able to put in our spreadsheets for the last, 2.5, 3 years,
Right.
so let's just not let this get away from us.
Yep. So the point being here is if you know what you've got in them, then for your cost to gain, now all of a sudden it becomes a whole lot easier to manage the other side on your live cattle and your lean hog marketings, right?
Absolutely, because I do believe that a lot of marketing decisions are affected by a guy's or a person's emotion, basically. So if you can
Yeah.
take one emotion bubble and pop it and put that away, that's you're ahead of everybody else already, right? So that'd be the best thing for a guy is just to eliminate some of those emotional type decisions that a guy has to do.
That's a new way of putting it, Joe. I've not heard it before. Pop the emotion bubbles and put it away and move on. I love it.
I don't know how that just came out of my mouth, but it did. So there
I love it.
you can use it.
Good. I'm going to use it like I made it up myself. But you're absolutely right. It just put that away, get it covered, move on, and deal with opportunities that are still out there. We've got a lot to cover yet, we need to talk about what's going on in the cattle trade, in the hog market, and we'll do a little bit more preview for tomorrow's supply and demand report. We're talking with Joe Kooima from KKV Trading here on AgriTalk.
Let's go to the markets page at profarmer.com and check today's closes, where July HRW wheat futures were 14 3/4 cents higher at 561. July SRW wheat down 2.5 to 540. May corn futures were 9 1/4 cents higher at 438. December corn futures closed at 469. That's up 8 cents on the day. May soybean futures 18 cents higher, 1166 1/4. July beans up 17 1/4 to 1176. July cotton 379 points higher on the day to 97.78. And on your livestocks, I've got April fat cattle $1.47 1/2 higher today, 188.72 1/2 at the close. April feeder futures up 42.5 cents to 256.30, and April lean hog futures 47 1/2 cents lower at 84.52 1/2. Get more market news every market day. Visit tryprofarmer.com. Opinions expressed on AgriTalk do not necessarily reflect the views of Farm Journal Broadcasting, affiliate stations, or sponsors. In the morning, you're coffeeed up and you're thinking. In the afternoon, you've calmed down, but you're still thinking. We're here all day. AgriTalk.
Welcome back to AgriTalk. I'm your host, Jeff Flory. Glad that you are with us. We are in the middle of a conversation with Joe Kooima, Varilek Trading. Joe, the supply and demand report coming our way tomorrow. You already mentioned it. Said, listen, let's not lose track of this thing. You never know. Where's your attention going first?
I think, looking at the sheet, I don't have it here in front of me, but I guess my eyes first went to South America to see what, all the weather talk that happened, all that type of stuff. And, the bigger, their government agencies down there kind of cutting back the crop. Do we up here, the USDA, do we finally see through that and cut that back a little bit? So I think that's the first thing to look at. And then I'll just go kind of our domestic ending stocks and see where they sit to see if we chewed through any. That might be kind of a hard push if we did. You just don't see as much demand coming through, no flash sales of corn or soybeans. So I would imagine that's going to be kind of a moot point with that. But I think it's the South American production will be the first thing I look at.
So on Brazilian soybean production, anything under 150 million metric tons, does that get a positive response, or do we have to wait until that actually turns into more business for U.S. beans?
I think it'll get the attention from the funds. Put it that way. We have to kind of think like the funds here to a certain degree. Right. And if that number does come in below 150, I would think that they say, well, we can no longer trade the spread between North American beans and South American beans, right? That's covered a little bit here. So maybe it's not so dire to have too many short positions on.
Right. Okay. Yeah, I don't know if we're going to get anything from these from a March supply and demand report that's going to. Well, I was going to say that could be a trend accelerator or a trend turner, but you said it in the last segment. Don't lose track of this report. It can do that. So we obviously have to pay very close attention to the numbers when we get them.
Right.
Let's go over to the livestock trade, unless you've got something that you want to hit on grains yet.
I think it covered most of kind of my bases here. So
all right, let's go over to the livestock trade then. I don't care if you want to start with the live cattle or the feeder cattle market here, Joe, because they both feel equally impressive to me. Let's go with live cattle. Mm-hmm. My goodness, here we are. We got the heavyweight choice boxes up around 305 again, and the market seems to be holding in there pretty well.
Absolutely. I think whether a guy is looking at this from a negative standpoint or a positive standpoint, these charts are making any person sit on the edge of their seat. We've been trapped in this range for the last couple of weeks. And yeah, the last couple of weeks, we got to the high end in April cattle, and we kind of fulfilled part of that gap that we left in October. And then all of a sudden somebody just flips the light switch to dark and boom, all of a sudden we're down, $2.50 in a session. And it's just like, what did I miss here? Right. And these moves are happening on a Monday, on a Tuesday type Wednesday thing. And then we get to the bottom end of that range, and these funds, they're willing to partake here or defend, some of their length. I mean, they have length, but they don't have an astronomical amount of length either, so they're going to defend what they have, and they've been in there. We've witnessed that. And then you get, last week they're talking about kill cuts, and it's very evident, but also, Thursday, Friday, there's a few bids out there, and cash hangs in pretty good. And then this week is the same thing. We give a little bit back on a Monday setback, and then a few feeler bids in the south of 82, which is just a buck below what they traded last week. And then all of a sudden today, it's like a good old-fashioned auction going on, 85 to 86 to 87 stuff up here in the north. So it just happened, and now you got ourselves on the higher end of the range. There are some deferred cattle that I would say officially have kind of broken out of this channel. So these funds, we know how they trade. They're not afraid to sell into sell-offs, and they're certainly not afraid to own more on a breakout pattern, especially one that's been coiled up for this long.
Yeah. Yep. Yeah. The Packers, the way that the Packers have been managing this with the cash bids, every time that we talk about, well, I don't know if there's going to be any support for the cash market this week. All you got to do is look at the total numbers, right, Joe? And I mean, that support isn't going anywhere for a while.
Right. Yeah. No, we're sitting here with very small numbers, and I think the last 2 weeks would show a very good, strong point of that they're cutting back hours, and they're doing that, not on purpose necessarily, but they're working their way to get these cattle weights a little bit bigger. That's a subject for a different time too. But yeah, they're cutting back hours, but yet they're still willing to come out there and look for cattle.
Yeah.
Which I think it doesn't sound like a huge, strong sentence there, but to me that just really speaks volumes immensely. That the tightness is for real. I mean, and every week we do a very good job of also cleaning up the show list. Like, there's no carryover. We just get them gone. So next week we start and figure out, okay, their show list isn't bothersome by any means.
Yeah. Yep. And I hear you. They've got a history. The Packers have got a history of trying to back some cattle up and maybe getting things a little heavy on the market-ready animal side of things. But the consumers demanded the choice in the prime beef too, right?
Yes. Yep. And having the boxes stay at the levels that they're at just tells you that, yes, we can, not we, but the Packers can move it. The retail level can still move it at these prices. So now the structure of the marketplace is always to, take something that's tight supply and high demand and further test where that price structure can go. Right. So the demand to me is right now it feels foolproof. I don't always like to use that terminology, but you have to go to a level where you get a kickback, and I don't know if we're quite there yet.
Yeah. Crazy. Mm-hmm. Okay. And as tight as the fat cattle supply is, the feeder cattle supply feels even tighter, doesn't it?
Yeah. I get texts from all my customers about, hey, did you hear what they brought over here? And it just was like, wow.
Futures market is scrambling to keep up with what's going on in cash.
Right. It's quite crazy to have that happen. And the structure of the feeder charts, look the same. And the funds still have some dry powder sitting on the sidelines. They're not afraid to come in here and buy some more. But, what a long, formation here we have on the fundamental side of the cattle too. Like usually it's 7 to 10 years. You kind of go through all this type of stuff, but the structure that we've been the last 2, 3 years, it's going to be a little bit longer for this whole cattle cycle to finally kind of go through. But it's certainly going to be probably one of the longest in my lifetime. It feels like to me.
Yeah, certainly. When you're in a market like we're in right now, it's kind of fun to see just what is the weirdest thing that you can find. Okay? And I think maybe the weirdest thing that I'm seeing right now is the 100 to 110 pound beef on dairy calves, bull calves, bringing $830 a head, Joe.
Mm-hmm. Yeah. The structure of the market is telling you that that's probably an okay strategy for right now. You got cheap corn that we can kind of lock in, and they're going to pay top dollar for not anything that walks, but with a limited supply of stuff, there's certainly not a premium, but there's a bigger price to have for those type of critters compared to what it was, say, 3 years ago, right? So there's guys are opportunistic. We're gonna dabble in some of that stuff too.
Yeah. What have you crystal balled what you think might be the top end in this cash feeder cattle market? The 7 weights?
Oh no, not lately. Sometimes I kind of go back and figure out what our COVID lows was for everything. I wish I had that in front of me, but I think, like, for example, like a COVID low for hogs was like 40 and they went to 120. So that was triple. Corn kind of doubled or a little bit more. Beans were kind of in the same capacity. So sometimes I'll leave a meeting and say, well, the feeders, I wish I had that number in front of me. The feeder COVID low was this price. And then I just let them kind of say, well, if that one doubled or went 2.5 times over the price of what the COVID low was, you get some pretty stout numbers. I want to say it was like, I don't know if it was north of 295 or something like that.
You're bumping $300.
Right, basically. But I usually let the everybody at the meeting kind of give their own number that they want. I don't usually say any numbers with it there, but that's always a fun little exercise to see what our COVID lows are and see what markets did after the fact and stuff. So I guess that's kind of a number I guess I'd throw out there.
Yeah. Wild. Mm-hmm. And the order buyers out west, what I'm picking up is that's kind of the number that they're thinking for the fall delivery of those 7-weight calves. It's pretty crazy. Fun conversation, Joe. Thank you, buddy.
Yep. Thank you so much.
You bet. Love having you guys on. Joe Kooima, Varilek Trading, KKV Trading. All right. Davis and I will be back to wrap up today's AgriTalk here in just a moment.
You're listening to AgriTalk, where the conversation begins. Join us at 855-4-TALK-AG. Welcome back to AgriTalk, everybody. Your pal Davis Michelson here with you. So glad you have opted to join myself and Chip Flory, who is standing by. He's here.
Yes.
We've got him. Great talk with Joe Kooima from KKV. That's Kooima Varilek. Let's play the compare and contrast. Oliver / Joe. Okay?
Okay.
Oliver comes on. The rallying grains today. It felt like Limit Up.
Yeah.
We got Joe Kooima telling us we got to pop our emotional bubbles.
I thought that was awesome.
That's great. It's awesome. Yeah. But, it's hard not to get excited, dude. A day like today. And then you got a guy like Oliver. He's a stoic fellow, and he's coming out with this exuberance. I just thought it was kind of an interesting little thought there.
Yeah, but at the same time, let's put the emotional bubble into some context here.
Okay.
And when Joe brought that up, what he was talking about was getting some hedge coverage on the long side of the market on feed needs, anticipated feed needs. Mm-hmm. So once you know what the cost is, then it becomes much easier to take the emotion out of it and run the numbers on what you should be doing with your risk management strategy on cattle and hogs. Okay? So, yeah, get rid of the emotion and then decide what you're going to do. Mike Walston, okay, who was president of Pro Farmer, was an editor at Pro Farmer.
I've heard of him.
Hired. Yeah, you've heard of him?
Yeah, I've heard of him.
Yeah, landowner editor.
That's right.
Hired me to come back to Cedar Falls to be a Pro Farmer. Love that.
I did not know that. That's
yes, he did.
All right.
Yes, he did. But you know, he was always a proponent of keep 6 months of grain, of feed locked in. Keep 6 months in, because then you always know. Let's say it takes 5.5 months to get those hogs to market.
Yeah.
Well, then you know what your costs are going to be. So if you know that, then you've done half the battle. Now you can go about your risk management on the hogs in particular, and figure out what you need to do. I thought it just made all the sense in the world.
Yeah, absolutely. And then, and it's okay to feel things. Let's put that out there. I think one of the differences between what Oliver was talking about and what Joe Kooima was talking about, Oliver isn't necessarily going to base any decisions on how excited he feels and how it almost felt like limit up today because of the way the market action was. When we get to that decision-making process, that's when it's important to remain pragmatic. That's when it's important to have your numbers already written down. Fair statement?
Yes. Yeah, yes. But you all of a sudden you're sending me back to when the pits were full. Because in those days, the emotion that we were talking about mattered. And it mattered big time. So guys would be sitting on the edge of the pit doing their point and figure charts, okay, on a card, doing it by hand. And they know where their moving averages are for the day. That's all written on a card. So they're checking their cards constantly. If you make the move through the 10-day moving average, or a 20 or a 50 or a 200, whatever it is that you're working on next, that generated emotion. And it generated activity. Who's to say? I mean, we talk about the dead inside marketing and trade that takes place because of the computer involvement.
Ooh.
But who's to say that there isn't some emotion left in how the computers have been programmed to react when a 10-day moving average is broken, a 20-day moving average is broken. So got to pay attention.
Well, speaking of those 10 and 20 days, Joe pointed out, a couple of moves above the 10-day and hold, a move above the 20-day moving average. Feels like some pretty healthy base building here.
Very organized. That's one of the things that I'm always looking for. If there is structure to the way that markets are working on establishing a low, if there's structure to that, I pay attention. If there is a pattern that is starting to repeat, you pay attention. That's critical in markets like these, and but at the same time, it's you also have to realize that the pattern that is in place right now and the upside momentum that is being generated is only as good as it lasts, for as long as it lasts. Because it can be here and it can be real And it can give you 1 or 2 days of excitement,
Yeah.
but it can also be gone before the end of the week.
Mm-hmm. Mm-hmm.
So
Sort of
pay
along
attention.
those lines, back to one other thing that I wrote down that Oliver said.
Yes.
The more times we hit resistance,
yeah,
we get closer to breaking out above.
yep. Double tops always hold, triple tops never hold. That's kind of
That's a
the
nugget.
yeah. Double tops always hold, triple tops never hold. You knock on the door long enough and hard enough, somebody's finally going to answer it and let you in. And the markets are always looking for where that resistance or that support has become worn down and vulnerable to a move.
Yeah.
Yep.
Huh.
National Weather Service 6 to 10-day forecast. This is for March 13th through the 17th. I don't know if you're going to believe this or not, but above normal temperatures across the entire Corn Belt.
That doesn't seem right.
Yeah, it's true. It's true. Above normal precipitation also likely across the Corn Belt for March 13th through the 17th. You got to get up to North Dakota to see something different. Come back tomorrow morning, 10:06 Central. We got the free-for-all coming your way.